Welcome back. You're watching Bazaar Morning Call and hope you're having a good morning. Well, as promised, let's get chatting with Indo Count Industries. The company has given the FY25 volume growth guidance of around 13% on a year-on-year basis, as well as margin guidance in that vicinity of around 16 to around 18%. To talk more on the outlook, we have with us Mr. Kailash R Lalpuria, the Executive Director and CEO of Indo Count Industries, who's joining in from the 20th Motilal Oswal Annual Global Investor Conference. Hi, Mr. Kailash. Good morning, and thanks a lot for joining in. It's been a while since we spoke. Well, despite a seasonality weak quarter, you have reported a rather good set of numbers, both on the top as well as on the bottom line. Do you expect this sort of a trend to continue for the remainder of the fiscal?
Yes, we reported a very good quarter, which is our best quarter, we would say, with a 27% revenue growth and 26% volume growth. And among all the 4 quarters, this is the weakest quarter, but still we performed very well, thus showing that the trend would continue. We have already given a guidance of 110 to 115 million meters going forward, maintaining the margin of 16 to 18%, and that correlates to almost 20% growth. So we are on track.
Okay, sir, in the near term, the US elections have had an impact on the textile space in it. I mean, there's a lot of uncertainty, right? So do you see any challenges at all once we're through the elections? Will the outcome have any bearing on demand for a company like you?
The US elections are of lesser relevance to us because both sides are good to India, and as a country, to us, we have performed well under all conditions, and we intend to do that in the future as well. India has come out as a strong supply chain manager, so it can perform very well going forward in the textile sector, which not only the US but other countries also realize that India, they should target for bilateral trade going forward in textiles, and we are very confident that whichever government is elected, we will get the necessary support because India is in a sweet spot.
Well, Indo Count has maintained the discipline on the debt side, sir. Do you sort of expect, how will you maintain this as you go ahead with some of these acquisition plans, and what can we expect there?
We have never leveraged our balance sheet. You know, that is the last thing which is in our mind, and we will never do it. We are almost a debt-free company, and we allocate our capital into our growth, and we plow back the profits into the company for the growth, and also providing the necessary distribution to all our stakeholders. Our dividend payout is good, and we invest into growth and sustainability, which is the foremost thing a company should do going forward.
All right. Tell us, what is the outlook for the overall textile industry? From an Indian market perspective, how do you see things shaping up?
The textile outlook is very good. Among, say, 5 top textile companies, China, India, Pakistan, Bangladesh, Vietnam, I always say that Bangladesh and Vietnam are labor arbitrage. They do not have raw material. Pakistan has got a saturated supply of raw material, whereas China plus one, we are all seeing, they have faltered onto their supply chain and their cost has gone up. India stands out not only from a cost standpoint, but also from a supply chain standpoint, how they can secure the supply chain in this decade. And that's why you see all the retailers and the consumers out there are looking at India prospectively to see that how they can leverage their supply chain to the next level by sourcing out of India. And because India is also having a strong economic backdrop and it is growing, everybody would love to do bilateral trade with India, grow their market share and participate in the economic outfront in India.
All right. Now, in the last few years, a lot of the US retailers have shut down, or they've seen sort of business headwinds. How beneficial is it for you and other companies? Do you see a lot of business coming your way?
Definitely, because you see the US retail has shrunk to a certain extent, and There were big retailers which went out of the business, unfortunately. Their market share is up for grabs. The existing retailers out there have got their share increased to various means. By formulating new strategies, we are working on these strategies onto our brands, onto our distribution, and onto our product development, where we are offering them a complete solution, not only on the product mix side, but also on the services side, thereby increasing not only our market share, but the existing retailers' market share. So this is an opportunity for us to grow not only as a company, but India as a country. There is a great demand out there in home textiles and apparel, and India should certainly do well in the coming years, not only in the US market, but in other trade blocs like EU, UK, Australia, UAE, and other GCC countries.
Okay, good conversation, and thank you very much for joining us here with some of that perspective.